start?
Yeah, so welcome everyone to this headliner session with Tony Olendo of ViFi. Tony is a founder. We met in 2023 during the L2 Africa tour. I believe, Tony, at that time you're working with Polygon. And then I don't know at that time if you already began ViFi, but that's when we started conversations around the ecosystem and DeFi in general. And we kept in touch with Tony, and we've been privileged to tap into his wealth of knowledge over those number of months. I remember also that time is when we first met the Scroll team. The Scroll founders were in town in Kenya around that time, and it was interesting to learn about Scroll, ZK. Most of us, for the first time, we're hearing about ZK and its applications. But yeah, here we are now. Tony is now building ViFi. I'll let him introduce himself. Let us know what ViFi does, and also, just we should be able to ask him a number of questions, seeing as he's been also in the Scroll ecosystem for a minute now. So any questions you need to know about experiences for him, I think this will be the best time to ask. So I think, Tony, take over the floor and feel free to be forthright with us. Some of the guys here, first-time founders. Let us know the truth, the real. Don't hold anything back, really. So karibu sana and welcome.
All right, thanks. So I guess before we begin, it'd be good for me to get a sense of everybody else who's in the room. So I don't know if you could tell me, we could just go around the room and have everybody introduce themselves, tell me what you're building and why you joined this particular program. So we'll start with Rosalind. Name, what you're building, why you joined.
Hello, good evening, everyone. I hope you can hear me clearly.
Mm-hmm.
Okay, great. So my name is Rosalind Munyiri. I am currently the community event and communications lead for the Kenya Scroll Node. Yeah, so I'm not a founder in this program, but excited to learn from you guys.
Okay, great. Karibu sana. Tim? Tim or anybody else who wants to unmute and start. But Tim, Baraka, hello, Chi, Dennis.
Hi guys, my name is Tim. I'm the founder of Bondly. It's meant to reinvent emotional and financial commitment for modern day relationships. And also trying to make it powered by blockchain.
Yeah, I think I catch Tim well. Tim, are you able to speak a bit louder?
Hello, can you guys hear me?
Yeah, we can hear you.
Hello?
Yeah.
Yeah, so I'm the founder of Bondly. It's a platform that actually is meant to reinvent emotional and financial commitment for modern day relationships through agreements, smart contracts, and milestones.
Nice. Baraka?
Hey, can you guys hear me? Yeah. So my name is Baraka, and I'm not a founder. I just work with the founders of NetPay, and I'm a backend developer. And we are building NetPay, a platform that uses stablecoins as payment, and it contains all business tools that help the merchants and individual users to accept stablecoins, like sending payment links, invoices, and also to on-ramp and off-ramp.
All right, and NetPay is in it's with Chuche.
Yeah, yes.
Okay, cool. All right. Good. Ochi, that's the Web3 Club. Ochi, I know you, so we can move on. Dennis?
Yeah. Hey everyone. I'm Dennis Kimathi, working on a project called Expendi. So it's mostly inspired by zero budget apps. But the challenge I found while using most of them was I'm a crypto native and I use my crypto daily. I use them to do subscriptions. So I decided to work on Expendi so that I can be able to manage all my crypto spendings under one platform. So that's what I'm working on.
Cool.
Thanks.
Gikenya?
Hi everyone, my name is Kenya. Currently working on Miniland, which is a DeFi protocol, which is allowing Africans to save in stablecoins and generate yields, and also provide or supply liquidity to our own reserves and earn interest on that. Yeah.
Cool. Collins?
So my name is Collins, working on a product called BPesa. So BPesa is basically a solution that allows P2P sending and receiving of money. But the whole idea behind it is we've built like an agentic infrastructure where apart from the normal sending and receiving money, just like M-Pesa, here in Africa, in Kenya, you're able to also withdraw that cash. So bringing basically crypto to normal user with the whole abstraction of the crypto terminologies and concepts. Where I'm in the program, my focus is mainly on, first of all, meeting the other founders and also the exposure to people who have already been in the space, have built something, and just trying to get to understand how their journey has been and picking points and how I can also be able to come up with a very strong and relevant product. Thank you.
Cool. Thanks, Collins. Mulandi? Cecilia. Okay, good. I was waiting for you to delay so I could give you the line I'm sure you've heard since you were a child. You're breaking my heart by not. Okay, you're unmuted.
Sorry, we make an issue. I'm not breaking your heart.
Okay.
Okay. My name is Cecilia Mulendi. I'm a DevRel with the Scroll local node. So currently providing support for the developers that are building their projects right now. Yeah, but
Okay.
besides that, I'm also a developer and also excited to learn from you guys. Yes.
Excellent. Leaky?
Hello everyone, my name is Leaky Njeru, the creator of Aquestpan. Aquest is an online platform where content creators get to create videos, post online, and earn money. We are doing that by connecting them with the brands that want to do online marketing and are looking for content creators who can be able to help them with that. Yeah, so you can take on our platform on questpana.xyz. Thank you.
Nice. Gideon?
Thank you. Yeah, my name is Gideon Gitonga. I'm building BlockUp. BlockUp is a SACCO protocol. We are trying to restore trust back to cooperatives and, of course, modernize SACCO so that the young people are able to participate. And that way we are able to guarantee the future of cooperatives, which have been integral to our survival and of course, to our economy for the last 1 or 8 years. So that is essentially what we're building. So within the solution, we have 5 modules. We're automating shared trading, so our SACCO shares are tradable. We are solving the guarantorship problem. We're making sure that you no longer need a guarantor to get a loan from a SACCO. We're making sure that members are able to vote through a DAO and originate proposals. We're also making sure that now SACCOs can vote to support digital assets as financial products within the institution. And of course, making sure that they are able to do their audits real time by deploying on-chain. So that's essentially what we are doing. And the reason why we're on this program, of course, is to create meaningful networks and of course be mentored by people who are within the Web3 space, so we're able to deliver a very good Web3 product for very traditional financial services, service providers such as SACCOs. Thank you.
And why did you join the Scroll Node program?
Yes, yeah. So we joined Node, obviously, to, of course, connect with other builders and other founders, but more importantly, also to build meaningful networks that are able to assist us in building a very palatable Web3 product that to be able to marry into traditional finance, mainly within the circles who are very sluggish in terms of adopting new technologies. So we would want to be able to get that kind of skill set, and of course also be able to network and get access to people who have more skill set within the space, within Web3 rather. Thank you.
Okay, cool. Chucha, I know you, but yeah, go ahead and introduce yourself.
Yeah, can you guys hear me?
Yeah.
Awesome. Nice to see you again, Tony. My name is David Machuche. I'm based here in Tanzania, and we're building NedePay, an all-in-one stablecoin platform for payments that includes payment links, invoices, swapping between local stablecoins. So we support 10 plus stablecoins, as well as on and off ramping to mobile and bank in less than 2 minutes. Currently support 5+ countries. We are building on Base. Our first solution was built on Base, but we're expanding to other blockchains such as Scroll. And the reason we're here is basically, like Gideon mentioned, learn from experienced guys in the space and the Scroll ecosystem like you, Tony, as well as integrate USDT on Scroll, as well as expand our ecosystem reach as well. Excited to be here and jam with the guys and learn from you guys as well.
All right, cool. So I guess as I start, I just want to talk about, this is a presentation I did for regulators. I'm the chairman. So my background would be, I've been a software developer for about 15 years now. Well, that's a long time. Yeah, so I started off building apps. First of all, I started off playing with computers since I was 8 years old. So I've been working with computers that whole time. But the tragedy was that nobody ever told me that you could build applications. And so when I finished high school, I was like, well, I don't want to just be a computer user. And so computer science and all these things didn't really appeal to me. And then I got a scholarship to attend a mobile app training boot camp. So the first ever one that was done in Kenya at eMobilis. The program was supported by Nokia and MIT at the time. And it was a really interesting program because I was able to build my first mobile apps. And we were building before Android and before iOS, before the iPhone was launched. So at the time, I think I remember being in class, and we were ideating, like just trying to play around with different ideas. And one of the ideas that we came up with was, imagine if you could build an app that you could send messages and send multimedia and do all these things real time. And I'm the one who said, I don't see how anybody's ever going to use an app like that, because you need data to be able to do that. But you could also do that with SMS and MMS. At that time, SMS and MMS looked like they were really strong. So that idea was essentially WhatsApp. And like I watched WhatsApp being built. It was on the Nokia OV store initially only. And then they ported to Android when Android launched. And the rest, as they say, is history. So that's really my background. I did a lot of I did mobile apps, built the first ever mobile app for SACCOs. I worked at a SACCO briefly where I was in charge of systems integrations, implemented ATMs back in the day, implemented ATMs, implemented a Visa integration. So I was in charge of all of that from the Visa standpoint. I also did the core banking system, so worked with the core banking system and implemented and built out and spec'd out a core banking system that was in use there, I think, for like 5 years. And I also built mobile banking. So I actually integrated the mobile banking suite, and we enabled SMS banking back in the day. So that was my first foray into like fintech, and that's when I kind of saw certain needs that kind of existed in terms of how people use money and finance generally. And when you work with SACCOs, you get to understand the basic units of human endeavor. So you have customers who came in at the time when they just had very simple like ambitions, the mama burgers and all these things, and they were able to save. And you saw people grow. You saw people grow tremendously. A guy comes in looking for a loan for a border. The cycle gives him a loan. He buys his first border, buys his second border, and eventually buys a cab and does all these things. So I kind of saw how like finance and like availability of credit could transform human lives, but I also saw people who were stuck inside of a debt cycle where they would borrow to pay fees. And that becomes a very defeatist way of living because you're only going to be borrowing to pay fees. So with that, I kind of like branched out, started my own like software development consultancy. And it was successful. We had about 10 clients at a particular point in time, but the service business was not for me. Service businesses drove me insane because you're only successful if you have tension between your incoming and your outgoing demands. Basically, if you have you success for a service-oriented business like that, like a consultancy, is only successful when you have you have an equal amount of or slightly more incoming requests. And so you have more business than you can serve at that particular point in time, but you also have enough staff to be able to serve your existing clients. And so you have to keep like managing that whole tension. Otherwise, you can't pay salaries, you can't do different things. And if you can, and if you go to the other end of the spectrum where you don't have enough work, but you have staff, then you're basically in a situation where you cannot pay payroll. And so that tension kind of drove me insane. And I was like, nah, I think I want to build products. And so I started off building like a micro-learning solution in 2017. We built like an AI version with everything kind of like lined out in terms of um, what it was like. This was before, I think Tala had just launched, and we were like trying to build out that in that whole space with micro lending and digital lending fairly early. But that business didn't go very far because I moved. Then I started another business where that was based out of Dallas, where we were helping nurses find jobs. So like a better job board dedicated to nurses and the medical staff. Because of the structure of life in the US, if you get hired, it takes about 3 to 6 months for you to start that particular role. And because there was no trusted authority to do credentialing, and credentialing is just verifying like the place you worked, how much time you spent, what your certifications are you licensed to practice in that particular state? So it was solving a really big problem, which in the end would turn out to be $1 billion problem because of a similar startup that started around the same time. But then we got our first letter of intent to partner with, I think, the second largest healthcare system in Texas. And just when we were about to like execute it, there was this small disease that started rippling across the world called COVID-19. I'm not sure if you heard about it, but it essentially wiped the hospital's appetite for any new ventures because they lost about $2 billion in market cap because of COVID. And so I always say that business caught COVID. And that's what happened. It eventually kind of collapsed. And so with that, there was a previous time in 2017 where I started working inside of crypto because I needed to send money back home. I'd moved to Trinidad, and like the payment hassle of trying to move money through traditional rails was very, very painful. Um, and so we began looking at, well, what's going to happen? How are we going to structure things? And how are we going to ensure that we could build ways for people to do remittances in better ways. We made a big bet on Ripple at the time. But then crypto went ahead. We weren't able to raise funds. And frankly, Ripple wasn't even at the level of maturity at the time that we could have done anything with it. I think, no, Stellar wasn't a place where we could have done anything with it. So I kind of just paused and went back to doing my own thing. In 2020, started dabbling in Ethereum again, writing smart contracts, things of that nature. I did a couple of different projects, like freelancing on the side while I was working. And I think it was around mid 2021, I was like, no, I think I'm done. I want to do Web3 full time. So I joined this boot camp. And at the time, my main job, I was the lead engineer in a particular company that was we were building social security software. And I was going live in 3 countries. And in the middle of that, I was doing a boot camp where I had weekly objectives, like in terms of writing smart contracts, building front ends, doing all those things. So you could imagine the tension. On the one side, I'm writing smart contracts and building and like learning skills in Ethereum. But then on the other hand, I'm also going live with 3 different software projects. So there was 3 months when my wife didn't see me. I was just locked in my office and I was grinding out. Every moment I got, I was grinding out. And I remember when I finally finished, I just collapsed. And I was like, okay, I can't do my Web2 job anymore. So that started off a whole journey. I got my first Web3 role in January of 2022. I was building Yearn Vault integrations for DAO treasuries, and Yearn is like what is Yearn? How would I define Yearn? It was like a lending protocol. But you could earn yield by depositing funds, and then people borrow those funds, and you get something on top of that. And so it was a really good experience. I worked in Yearn. I worked in the Yearn ecosystem, but also got the chance to work with a lot of DAOs. And this is 2021, so the height of like DAO fever. And it was a really good introduction for me in terms of being full-time in like a crypto role, because it enabled me to just see how people genuinely wanted to reinvent work, remove hierarchical structures and establish just a way for people to actually engage and build in a more diligent way. And so that opened the door for me to get further in. And then 6 months in, I was like, okay, I think I'm done here. And I developed a passion for developer education, basically. I like being in front of developers, sitting with developers, working with them, more than I realized I like building protocols. And so I transitioned to doing DevRel. I also doing developer education specifically at Polygon. I did that for about 6 months. And then I woke up one day and my boss and my boss's boss were both fired, and I was given a promotion to become the lead DevRel engineer. And the team that was there actually accepted and said, yeah, you should come and join us. And so that's how I ended up being DevRel engineer. And I think I did that for about 1.5 years as well. It was a really good opportunity because it allowed me to travel and meet developer communities across the world. So I think all in all, I was counting like 33 cities during that time. And I traveled and I saw so much. But it also honed my sense of what's coming next and what the general direction will be in terms of crypto. And that's what I just want to talk about today. So the basis of it is that a lot of us Africans, when we set about building solutions, we always think in the context of, well, I need to build this thing for my local context. And while I appreciate the relevance and the desire for that, I think crypto represents a far bigger opportunity for developers. Now, when I moved to Trinidad, I spent about 3 years sending applications, looking for work, doing all these things. 3 years. Trying to break into Silicon Valley of the US from Trinidad was very difficult. Eventually, I managed, but never landed anything substantive, like from a long-term position. And so I did like six-month contracts. I was fractional CTO at a couple of startups. I did various things that were very annoying, but very, very useful in the end. And so with that, I kind of got a particular lens on how to build inside of a global system. But then when I began looking at crypto, I kind of saw, well, there's wider movements going on here. And so in terms of how I think now and how I build now is that I don't necessarily build for Africa. I just build for the world, just like anybody else. Now, what does that mean? Could somebody tell me the last DeFi protocol they used? What DeFi protocol did you use in like the past month or so? Anybody?
Mento swap.
Mento?
Mento, not for Celo.
Yeah, I guess. Okay, fine. Squid router. What does Squid router do? That is.
It's a bridge.
It's a bridge. Okay, tell me more about it.
So ideally, it can bridge tokens from across event chains, as well as from Solana to EVM, or from Cosmos ecosystem to EVM, or from Solana to Cosmos. Yeah.
Okay. So that's a good example, right? What's Shino or Rhino? I don't know about Rhino. Tell me about Rhino, Matu. Alex.
Yeah, Rhino is a bridge and cross-chain swap, I think, as well.
Yeah. So cross-chain bridge swapping venue. Let's dig into that. Which are the biggest cross-chain solutions or bridges now? You have Across. You have Li-Fi, Wormhole, which is the OG, and a couple of others, right? Let's delve into actually the Nigerian one. Let's delve into, I forget what it's called. It's built by Sil.
Hyperbridge, yeah?
Hyperbridge. Anybody of you, well, other than Alex, anybody else wants to have you heard of Hyperbridge? Okay. Alex, do you want to tell us how Hyperbridge works? According to you. Alex?
Sorry.
Oh,
Yeah.
yeah.
So I'm not sure exactly if I can put it to words or if I understand what they really do exactly, but Hyperbridge, and correct me if I'm wrong, is a bridging solution that uses ZK somehow to hide intent or something. And prevent, I think what they called MEV attacks or so. I don't know. That's how I understood it.
Yeah, so Hyperbridge essentially uses ZK. So they connect to chains. They were built out of the Polkadot ecosystem initially. And what they started to do is they started to build a bridge between Polkadot and Ethereum. And they built like a ZK-based bridge, which is like best in class communication and all those things, right? So when they built that, they enabled the they enabled they enabled basically a secure way of like generating a proof. And if you have a ZK proof, then it's the strongest verifiable computing structure that you could put in place to be able to facilitate transfer between two bridges. Now they built best-in-class tech. The other bridges actually saw it and they basically ripped them off. And I won't say which ones. But this Hyperbridge is a really good example of the point I want to make in terms of they were embedded inside of a particular ecosystem. They saw a gap that existed inside of this ecosystem. They built a tool that was really, really strong and compelling. The community loved it so much that the community raised $2.5 million for them. And then after that, the VCs gave them a further 5 million, a further 2.5 million. So all in, they had like $5 million they've raised. And that enables them to continue to build. Now, the Hyperbridge founders are Nigerian. Does anybody care about that inside of a global context? No. They solved a problem. They were able to actually do all of and actually validate the thesis, built out a product, solved a problem, and started to move transactions. I think now they've probably secured like $1 million so far inside of their bridge. And the transaction values are going to keep growing. Polkadot just sucks. But it's a good example for us to begin to consider what the mechanics of this particular protocol does. Now, in the Kenyan context, how many of us are thinking about building for the world? And I'll tell you, in terms of the massive levels of opportunities that exist, there's a lot more opportunity that exists outside of building for your local jurisdiction than exists building for the world. And this takes me to the business case for crypto, which I just want to talk about here. So this is, if you're looking at the Kenyan context, you have close to 2 billion that has been transacted between 2023 and 2024. And Kenya has the second highest web traffic to crypto sites in Africa. But in a global context, we rank number 19 in terms of adoption. But let's look at the cost of being wrong and how we need to start shifting how we think, right? Whenever people think about these technologies, people have said various things that are very wrong. So the president of Western Union said in 1876, the telephone has too many shortcomings to be seriously considered as a means of communication, which obviously was not true. The president of the Michigan Savings Bank had this to say about the Ford Motor Company. The horse is here to stay, but the automation is only a novelty, a fad. And these are the same things that the central bank here kind of said. And also cost of being wrong is that the Michigan Savings Bank missed out on opportunity to be able to actually invest. The internet will fade away because most people have nothing to say to each other. This is what a prize-winning economist said in 1998 about the internet. And just today, how many things have you said to somebody else on the internet? If you look at your messages, WhatsApp messages you received and sent, and all those kinds of things. There's no chance that the iPhone is going to get any significant market share. This is what Steve Ballmer said. And so these are bets people make, respected individuals who do not have a clue about what they were saying because people don't have a crystal ball. And so individuals have to be able to look at how to position themselves as they're building inside of this ecosystem. And so there's a lot of depth that kind of exists, but even in terms of the business of crypto, if I was to adapt this, is the media headlines and the levels of application and sophistication that we're building are just the tip of the iceberg. And we need to start going deeper. We need to go much, much deeper. From a market outlook, so Kenya, we have Nigeria, South Africa, and Kenya that are emerging. Ethiopia is probably the highest. And crypto adoption trends across these 4 countries tell us where we as builders need to start focusing our efforts. And so if you're building a solution, you know which areas to begin to target and how you could actually get to the strongest growth, right? There's things here that I'm going to just go ahead of. This is the core of what I wanted to be able to actually bring out here. So let's look at a little bit deeper. at who are the movers and the shakers inside of this particular industry and what the movement is. So globally, we have Visa has introduced a tokenized asset platform that's targeting fiat-backed tokens. You have BlackRock's Biddle Fund, which tops 1 billion. I think it's now at 2 billion. You have Citi, JP Morgan, and others competing in tokenization settlement rails. You have real estate investors, Damac, who've signed a 1 billion deal to be able to provide tokenized real estate. Now, if you look at the RWA play and where the real opportunities lie, you see here we have funds that are comprising, in terms of asset classes, you have funds, you have fixed income, equities, real estate, other alternative investments, deposits. Stable coins make up a majority, but they're just the beginning. Lending and credit is kind of starting out. Treasury and liquidity, derivatives also pretty low, but they're going to keep increasing. And then alternative investments. Now, let's look at lending and credit in 2023. No, sorry, the projected growth of these particular areas. We see here equities are going to be big, real estate is going to be big, and other development and then other alternative investments. So in terms of asset classes, we're foreseeing a growth to about 18.9 trillion. Currently, the TVL of Bitcoin and Ethereum is probably about 3 trillion. And so what does this tell us in terms of where the general movements are going to be? It's going to be a really tough space. Now, a lot of us are building payment solutions and cross-border payment solutions and all those things. My prediction is that they're going to be quickly commoditized. And by commoditization, I mean there'll be bigger and bigger people who will be coming in and providing the same service at a much higher rate. And so you're going to be competing. It's not that you can't win, but you're going to be competing with people inside of a very competitive space. And so from a strategy standpoint, as a builder, you want to start thinking about what your next steps and moves are and where capital is going to be allocated. If the conservative scenario is that in the next 10 years, we're going to be at 12.5 trillion and optimistically it's 23 trillion, then how are we positioning ourselves to be able to take advantage of these particular solutions? And even locally, how are we looking to onboard funds, fixed incomes, equities, real estate inside of our local jurisdictions? I think those are where the movements currently exist. Now, if you're looking at traditional finance, the largest asset manager is going all in on tokenization. BlackRock did about 11 trillion in assets under management. They have a Bitcoin ETF that's about 57 billion, and they have a 2 billion Biddle Fund, which is a tokenized money market fund. Now, in your jurisdiction in Tanzania or in Kenya, how many funds have you seen that have any kind of exposure to crypto? You'll find there is none. Grayscale has a large, they started like the Bitcoin ETF before an ETF, and it was at that value. You have other players, Galaxy Digital Asset Management and others who are doing massive volumes as well. But this is where I was gonna like end. Well, not really, but yeah. About 44% of funds in Wall Street currently have exposure to crypto, and they have diversified about 10% of their funds to have crypto exposure. So of their portfolios, 10% of them are allocated to crypto. So why this surge of interest from institutional investors? Let's start looking at it. Liquidity is the main driver. So I don't know if any of you have bought shares before, but exchanging securities for stablecoins is very difficult. But we now stand in a space where we could actually do that fairly easily. So liquidity, crypto doesn't sleep. You can trade 24 hours a day, 7 days a week. The Nairobi Stock Exchange closes at about 3:30. The bond market the same, and all these spaces. Inside of the securities space, you could trade at whatever time. From a liquidity standpoint, and well, it's basically access. You could now have, and access is the biggest difference, is that if we know that 18 trillion is going to be coming into this particular space, and for the first time in the history of the world, you have the largest hedge fund building on the exact same rails as you. What does that mean? What does that mean for you? For somebody who has access to this information, that you could build financial products on the same technology as the largest asset manager that's managing 11 trillion. And I want you to contextualize what 11 trillion means. $11 trillion, you can't even convert it to a reasonable number in an African economy. If you convert it to Tanzanian shillings or to Kenyan shillings, it's a ridiculous number. But those guys are building on the same rails as you. So how do you structure your products and what you're building to be able to integrate with some of these things? So this brings me to the core of what we're doing, is that DeFi is at the center of this new financial revolution. And so when we're peeling back what the crypto industry means and what it looks like and where it's going, DeFi is going to be at the core of this whole movement. And so DeFi is that you don't need to apply for anything or to open an account. You just get access by creating a wallet. It's flexible. You can move your assets anywhere in the world at any time without asking for permission. It's transparent. Everyone involved can see the full set of transactions, and private corporations rarely grant that kind of transparency. It's fast. Interest rates and rewards often update daily, as quickly as 15 seconds for some, and it can be significantly higher than traditional Wall Street. And so how are we building the Lego blocks to bring our economies on chain? If American traditional financial markets are coming on chain, how are we as builders preparing our financial markets to be able to come on chain? And so when you're looking at what that DeFi bridge would look like, this is a breakdown of the movement from TradFi to DeFi, right? So you have cooperatives and SACCOs on the other end. You have DAOs on another. That's the comparative analysis. You have money market funds and treasury bonds that all are ripe for tokenization. So you're building B2B dashboards for token issuance and management bonds. These are the opportunities that currently exist. You have gold, diamonds, and oil, and all these things that are found, and other mineral resources that are found inside of our jurisdictions. Those could be tokenized. You have real estate investments that function as trust. You could have tokenized real estate and tokenized mortgage and property loans as well. You have stable coins, which is the simplest piece, if you ask me, from a DeFi standpoint, where you have on and off ramp products that kind of enable you to move from fiat to stable coins. And then you have banking and credit products, SACCO, lending apps, and so on and so forth. Those ones could be integrated with things like Euler and different other solutions where you could build lending products with DeFi source of funds. You could do P2P lending products. You could do on-chain loan guarantee models. You could do new lines of collateral like tokenized security, tokenized real estate. And then you could have fixed income products that existed before, and you have very many yield-bearing DeFi strategies. And all we need to do is build front ends that expose African consumers to DeFi yield results. So if I was to stop somewhere, it would be here and allow us to begin to consider what this looks like. But if I'm talking to an African builder, the focus is we have to stop building for the Mamambogas and start to look at, okay, what's the next stage and next evolution? And where this becomes particularly important is when you're looking at the next stage of development, even as laws are going to start coming in. It means that there'll be massive institutional flows that are ripe. And if we don't prepare ourselves, then other people are going to come up and take advantage of all of these things. So yeah, that's it. That's the end of my presentation. But yeah. Any thoughts, questions, concerns, considerations?
Tony, that was amazing, man. I feel like we should have like a purely DeFi course based on that. So I think I'll start with a question just from where you started your story, like your journey. You seem to have moved a lot, or you have this ability to kind of shape shift across different verticals in the space. A lot of experimentation. Was this organic, or was it something that you're mindful of from the beginning?
I'd say in life, I think you have to know what your superpower is. My superpower is I have the ability to learn new concepts very quickly and adapt like my existing skill base to a new one very, very quickly. So if it is that I need to pivot, I pivot very quickly but like I like learning. So I like learning, I like consuming knowledge, reading books, all these kinds of things. And what that means is that it gives me a base because everything is a new form of what already existed. So that's an important, I guess, dynamic for me. The other thing I'd say is that I always wanted to build a business and I always want to build a startup and have the kind of flexibility that building my own company would bring from a schedule standpoint. Employment was not for me. I knew that very well, but then I needed to be employed for however long I did. And I'm very grateful for the initial exposure and experience I had because it gave me the ability to understand how large companies work. So I've worked for startups and I've worked for larger companies and I've seen the gamut. And yeah, but in the same way, I think, yeah, the thing I said before was for me, it was the ability to transfer skills very quickly, but also a strong sense of what's coming next, has always guided me. So when I was building websites, I quickly realized because I started off not knowing anything and quickly got really good at it. And then I realized the time is going to come where this is not a skill I could bank on for the rest of my career. And it was really early, but I knew it's going to be commoditized. AI, people are going to be able to build websites from their home. And it's not a service you could offer long term. And it wasn't going to lead me to driving a Ferrari anyway. So I quit that really quickly. And started focusing on core software development and then did other things, blah, blah, blah. So I would say it's coupled with those three things. Personally, for me, it was a strong learning mentality, the ability to transfer skills fairly quickly, and a strong sense of what's coming next and being able to position myself relevant to that. Yeah.
I don't know, question from anyone else.
Hi,
Given,
can you hear me? Oh,
go on.
wait, I can't see who else is talking. Right. Should I go on?
Yeah.
Okay, great. So, thank you so much for that, Tony. And I guess this would be the right place to ask this question, considering you have been in the industry for quite a bit. And I recently just started exploring DAO governance and sort of the balance between security and okay, the issue here is a lot of these companies, not exactly the companies, but we are relying on immutability here, right, to enhance security for a lot of these companies. And I was just thinking of something like BlockUp, which is dealing in circles. And the idea here is eliminating the human process in decision making, sort of, and automating a lot of these processes. So I just want to know how you have handled that bit on decision making and ensuring you mitigate risks. Yeah, I don't know if you get my reasoning, my line of reasoning. Okay, great.
So ideally, this goes back to, I guess, even my initial interest and like area of focus, which was looking at like DeFi tools as hyperstructures. And I'll go look for the particular article. But hyperstructures are basically structures that are meant to exist. Yeah, so excuse me. Yeah, so basically, if you look at the movement and where we're headed, is that we're going to have hyperstructures as built off of DeFi Lego blocks. And what do hyperstructures mean? These are just like trusted smart contracts that are going to exist. So imagine in a world where you're building financial rules, and a life-threatening disease comes and wipes out humanity. The hyperstructure remains, regardless of human beings. And so there's a balance in terms of what that looks like. I think we've seen the whole point of like DAO governance kind of devolve into a mess, really. So I think there's a balance to be struck between those two realities where you have a hyperstructure or like DAO governance that exists. But I think of the early stages of a project or a product, you need centralized decision making to ensure that things flow. I have a lot of trauma from being in a DAO that didn't have strong governance. And so you spend so much time building consensus, getting people to agree on something that's a common sense decision. And that is eventually like that just causes decision fatigue, and people eventually just go on to do other things. So I think there's a balance there. There's a lot of things in terms of DAO governance, from the problems that exist with token weighted governance, where if you hold on X number of tokens and you're the one who makes the decision, and there's various people who've done various levels of research on this and how to come up with different models. I think there's a scroll proposal right now. If you go check out the scroll forum, there's one that essentially maps out a new way to motivate people. But I think DAOs generally fall into the tragedy of the commons, where if you have people, if it belongs to everybody, then it belongs to no one. And so you have to incentivize people to continue to care. Yeah. But yeah, hyperstructures, look into that.
Great. Thanks for that.
Yeah.
Yeah, I have one more question, Tony. So yeah, obviously decentralization has really changed a lot and brought out a lot of opportunity. And currently there's a huge conversation around privacy. And so, with regards to DeFi, and institutional finance, what role does privacy play, and how do you think Scroll is aligning to such?
Yeah. So there's a lot of things. There's a very legitimate concerns around privacy. And with the concerns around privacy, there'll be different tools that are being developed to just obscure financial transactions and all these things. So I think Scroll recently rolled out a new tool that will make stablecoin payments private, in a sense, which is good, and various other tools that are being built. So we have a good structure in place. We have a good design, and I think that you're going to see some of those things roll out in a way that is more secure. And I think those are going to be enshrined in the protocol level as well, even on an Ethereum standpoint. Right now, you could know exactly how much I have on chain, but if I ask you, Ochi, how much money do you have in your bank account right now, you wouldn't be willing to tell everybody here. But then somehow that's available for anybody to see on chain. So that's not a structure that's going to last. And I think we're beginning to see innovation happening around that.
Thanks for that.
Great. Thanks, Tony. I think something you might have skipped, could be deliberate or not, is letting us know what ViFi does.
Right.
Yeah,
Right.
because
So,
yeah, go ahead.
Yeah, so ViFi, we have three products really. So one, we have OneWrap, which is our wallet that is designed to facilitate payments and be the front end really for ViFi. For our FX protocol, we have an FX protocol that we've been building for quite some time, which is just an on-chain FX swap venue that allows you to basically provide single-sided liquidity for local currency stablecoins against the US. And with ViFi, you'll be able to move from a local currency position to a USD position at any volume, at any time, and while being profitable for LPs. So that's the thesis around ViFi. Yeah. And then we have our stablecoins and tokenized money market fund play that we also have that we're working with various governments across the world on.
Great. And I think this is important to know for some of the founders here because some of them are dealing deeply with stablecoins, non-USD stablecoins, knowing how they'd be able to integrate or tap into the liquidity, especially on Scroll, will be something they'd be, I think, interested to explore with you. I don't know if ViFi, how far along it is, if they can integrate, or how soon they'd be able to integrate. I know Collins has launched a cash stablecoin on Scroll. I know Machuche are dealing with stablecoins a lot. Kenya also has a non-USD stablecoin yield bearing mechanism he's building around his product. And I think those are guys who should talk to you. So yeah, look out for that, Tony.
Yeah. Yeah, we will be launching by the end of the year, and from there we'll be able to have more to discuss around that.
Awesome. I think we are now at the end of this session. So I want to thank Tony quite much. And Tony, I think we have one more session to ask of you, maybe in a few weeks. We're hoping we'll be able to lock time for that, but we'll reach out to let you know when, and when also you're available for that. So
yeah, so I have a quick question there before just Tony jumps in and we wrap up, if that's okay.
Yes, go ahead.
Yeah, thanks again, Tony. So you were touching a bit on DeFi and how it's pretty much the future if you want to compete with these rails.
Yeah.
So my question is, with DeFi it's pretty much decentralized, right? And with global adoption, with regulation, there's things like KYC and the like, right? So what would be your advice in terms of like tackling that, and how do you see that panning out? Because it's like two different ends, right? You have decentralization and you have pretty much like regulatory aspect, if that makes sense.
So that comes to like service providers, right? I think where we're going, the regulatory standpoint would be important, but KYC and all those things are meant to be handled by service providers. So NetaPay could integrate with Aave and provide loans on Aave. Now, NetaPay would take on the maybe custodial or non-custodial aspect, but also take on the responsibility to provide the vaults and all those things and integrate with Aave, but also provide KYC for the users. And so NetaPay is a locally regulated aspect, and then you have decentralized finance that enable people you could build integrations with existing DeFi solutions. On top of NetaPay, you could still build your own DeFi protocols that do other things. So there's a pathway there in terms of connecting the average Joe, because I could bet you $1 million that nobody's gonna start using Aave. Not everybody's gonna use Aave, but everybody's gonna use NetaPay. And if you build those integrations, then you then create different strategies for you to be able to take advantage of.
I got you. Thanks a lot. So basically pretty much like trying to abstract the whole process, but again, basically, so in this example, NetaPay would pretty much be dealing with the KYCs and be responsible for the integrations, right?
Yeah.
Amazing. Thanks.
Yeah.
Thanks, Chuche. Thank you, Tony. Once again, thank you, each and every one of you, for making time for this. And we wish you all the best in hitting your milestones. And please feel free to reach out to Tony for advice or whatever it is. So we see this through for you. So thank you, everyone, and see you on Friday. We'll have Felix from Kotani Pay take us through what they're doing and also give us some founder advice as well. So wish you a good evening wherever you are. Thank you very much.
All right, bye everyone. Have a good evening.
Thanks, Tony. Thanks, Alex. Thanks, Ochi.
Bye, everyone.
Goodbye.